guys, how's everybody doing? Good morning out there in YouTube land and X land. Here's Jackson. Uh-oh, here comes Jackson. He's coming over here to see who's over here. Who am I talking to? Who am I talking to, Jackson? Come here. Let's see Jackson. Come here, Jackson. You want a treat yet? Come here. Come here. Come here. I don't really have a treat for you, buddy, but thanks for making an appearance. All right, guys. Thanks for being here this morning. Sorry this late. Jackson and I overslept a little bit this morning. I was up late working on a video last night. I didn't quite get it done, but hopefully it'll be done today. I hope you guys like it. I hope you like the one I did yesterday. Then I have another video planned today. I'm trying to make more videos for you guys. All right. So Jackson, calm down. Calm down. Calm down, Jackson. Hang on here. I think I closed my live stream. Did I close the live stream now? Gosh darn it. Jackson, I don't know what you want, but you got to chill out. Gosh darn it. I think I closed the live stream. Just a second, Jackson. Hang on. I got two people in here. All right. Now I just got one person. Hang on. I'm getting off to a bad start. Hang on. I got two instances of the freaking thing open. All right. One instance, one max, 3 people watching. I have 4 people watching, 3 people commenting, or 2 people commenting. I appreciate you guys. We got Dejan and William in the house. All right. So now let's get serious about this and stop screwing around, Max. Stop screwing around. Silver futures. I was looking at, you know what I was doing last night, looking at silver futures. All right. Well, let's start here with S&P 100 or S&P 500 futures, I should say. I like the looks of that. I like a breakout in the morning. Look at this. We haven't quite broken over the old high, but heck yes. Of course, we probably will, but then we want to watch and make sure that it's not a trap and a failure. But for right now, it looks like we're going to try to break out. So let's look at the old NASDAQ futures. I mean, what are you going to say about that? That's a beautiful sight to see. You can see, though, they could be out over their skis. It could get out. You see this all the time. It gets out here somewhere. There's no two-way action. Sellers bring it back down to where there is two-way action, to where there's buyers. So anyway, we'll see what happens. But that does happen quite often. Looks like the 25-100 level's pretty. Let's just put a line on that level. That's a pretty good level right there. Bullish above, bearish below, right? Hang on. All right, there we go. All right, so that's in Qs. Let's look at the old Qs. The old Qs here. It looks about the same. Q's left behind a little gap this morning. It looks just like the S&P's gap looked last night. The SPY's gap. The SPY did the same thing yesterday, just a tiny gap from the close to the open. Didn't even gap over the range of the day. But in any event, see this pattern right here? The SPY did that yesterday. So, all right, so let's look at Bitcoin because that's all that matters. When you have these high yield assets, that's all that matters because everything's based on Bitcoin or a meme. On the ones I like, Mimi and Alti and blocks and anyway. All right. Well, even K yield is memeified. K yield is memeified. Maybe not as memeified as some of the other ones, but it is memeified. All right. Well, we got Bitcoin bouncing. Hopefully, it bottomed here at 86. Pretty crazy run from 91 on Friday to 86 on Sunday. And now we've bounced back to you know, kind of about in the middle of the range. Let's see on the single stocks what are moving. USO, Nvidia. I'm just looking here at the board. Amazon, Google, nothing huge. You know, we haven't checked in a while. The pros versus Joe's indicator, VIX divided by VIX. VIX divided by VIX. Well, I don't have my indicators on it. Where is moving averages, cross alert, multi-time frame, boom. Now let's overlay the market, the cues on it. All right, pros versus Joe's indicator. Went bullish in July, and that was a great time to be bullish. Started getting cautious in September and October, which is a great time to get cautious. Got bullish again the last few days of October, and that was a huge fake out. I didn't fall for it. I was actually selling stuff on that day, but anyway, looked like it was going to break out, and then that was a failure, and then we went down to the November low. But then the good guys took over again in early December and have been running the show. The good guys took over again back here around 620, and the price really hasn't moved. The price is at 630, but anyway, the people are taking off. The pros versus Joe's indicator means pros are taking off hedges versus Joe's. It happened in July, and it happened again recently. So, all right, let's look at the divas. But first, let's look at the diva charts. All right, let's get this cues off this bottom screen here. So these are the diversified divas. Blocks is well, the premier ballerina is ULTY, just because of its age before beauty. Now this is the premier diva, the diva to end all divas. Well, I mean, we don't really follow moving averages on, you aren't supposed to follow technical analysis on high yield funds because they pay you your money in a yield. And so you can't chart a yield, because if you chart the price is minus your yield, and the price always goes down. So you would think you'd always, anyway, whatever, you guys get it. Well, it's the same thing. This is looking kind of like April, and look, this is April and May. Went down, made a couple of lows, but if we can ever get Alti back above the line. Oh, I know what I was going to say. You can't look at technical analysis on Alti or on any of these high yield funds, because they give you most of your return in the form of yield, and yield doesn't show up on the chart unless you go to settings and hit adjust data for dividends. Then the yield is reflected on the chart. So you can do like trend following basic technical analysis on this. So we got a bull signal last July, and of course, and then in March and February, March, and April, we got bear signals. But then we got another bull signal in May from just by going with the moving averages. And then also in June, our other indicator gave a bullish outlook. That was the pros versus Joe's, and sure enough, we melted up all summer. All right, but that's Alti. Now these are daily bars, but I sure like Alti to get on the other side of this moving average. I mean, that's kind of the definition of a trend change. So we'll see if they can do it. I mean, they did it last May, but I mean, it may not. Who knows? Every time's different. They could also fail. All right, so that's Alti. Now let's look at blocks. Now this is with dividends on, so we can actually do technical analysis on this, because this is factoring in your overall investment. You can't trade the price, is what I'm trying to say, because the price isn't anyway, but this is the trend of your overall investment. And you can see that, in these guys were trending up and then lost their moving average in November, and then they lost their longer term moving average, mid-November. But anyway, these guys, of course, recover faster. We all know blocks recovers faster because of the lightning spreads. They have uncapped upside. And also they have higher volatility stocks. So they'll probably do better in a bull market. They have crazier stocks, especially a crypto bull. But, they took back their moving average just recently and trying to get some momentum. We'll see. So that's blocks. Now let's look at ULTI. Now this one is like the diva that's like, it's her first year in the, on Broadway, and she's already on coke, and she's just she's sleeping with the director. This diva is out of control. Anyway, she's trying to put it together though. So, but this diva is the most diva-ish, let's just say. In a runaway bull market, it might very well be the best performing one. So, it just, so let's see, what other divas do we have? Well, we have K-Yield. Now, K-Yield is the kind of diva that's like, K-Yield is like, it's like the grand, the one that everyone likes, the sensible diva. All right. Now, K-Yield, of course, it hasn't been long enough to use those moving averages, but you can see it took back its moving averages like in early January, and it's been moving up. So good job, K-Yield. Now we have two new divas to the party. Well, I'm not going to call Mago. Mago's an understudy, but Mimi, M-E-M-Y, is a diva. This one is the definition of a diva. This one is hopefully going to be like Alti, but not on coke and not sleeping with the director. This one's going to hopefully be a good diva. We'll see. We'll see. I can't believe Roundhill didn't come out with the, because Roundhill, that's meme. I can't believe they didn't make a meme. Whatever. I'm glad Tuttle got it. Hey, remember, Tuttle's going to be here Friday. I put something on Discord where I have the things to ask Tuttle, and I've already put 2 questions of my own in there. I haven't seen any questions from you guys, but it's the second room down in Discord. I added a new room. There's questions for Matthew Tuttle. So put him in there. I'm going to ask him, why in the hell did he do a capped upside fund on Mago? That's the first thing I'm going to ask him. If he doesn't answer my question right, I'm going to cut the live stream. If I was president, I would, I've told you guys, first presidential order I would sign. No capped upside. All covered call ETFs must either not cover the full portfolio, use a spread, or sell puts. Okay, or sell put spreads and own stock. You got to do it that way, or else you're going to be in big trouble with me. Anyway, no, but honestly, I am going to ask him that. It's curious to me why he did a will strategy on this. Anyway, but because why didn't he do the will? Because what I'm saying, why didn't he do the will strategy on this one? Then what's the difference? Anyway, Mimi's lightning spread, Mago's the will strategy. So not that there's anything. The will strategy is great. It's good to teach beginners how options work and stuff, but it's not a professional strategy, in my opinion. All right, so let's look at the divas now. We looked at the diva charts, but let's look at the numbers. So let's just look at the daily percent change. I like to do this. Going to be getting a trackpad soon. I received a very generous donation last night after my live stream. I appreciated it. I don't know if the person wants to remain anonymous, so I'm not going to say anything. But anyway, I'm going to be getting a trackpad soon, and so you won't hear me gripe about. Right now, all you can do is double right click, and it zooms in a little bit. But that's, gosh darn, it's not even doing it now. Anyway, but I just like to look at the days as kind of a unit, and this one, this looks kind of like early last week and the week before that, when those were good weeks, when we were just kind of marching upwards. We'll take it. It looks back here like these days. We just want to avoid these big down days. When we had one the other day, turned out to be a viable dip. So we'll see what happens when we get to these highs. We'll see if we fell and go the other way. All right. So now let's look at the rolling total return on all of them. Chippy's just Chippy. Chippy's a monster, but SPY and Qs are both above 0. QLDY is only 1.3% underwater at this point. K-Yield is down about 4.9%. Look at GPTY is getting ready to pass K-Yield. And anyway, then we have, you know, I think all these divas got on coke with Alti, and they just guys can't. You know, these guys are. We have a we have a um, we have a bad diva community right now, or we have the past. I picked the wrong time to start the divas. If I would have done the diversified divas this summer, you know, in the third quarter instead of the fourth quarter, I mean, these things would have all been up 30, 40%. Even ULTY was up this summer, 20% on price. On price alone, it was up 20%. Or maybe that was total return. I think it was price alone, it was up 20% at one point this summer. So just need the market to turn around. All right. Yeah, I do not believe in capped upside. Like I say, that's the first presidential order I would sign. First presidential order I would sign. And then I would pick one of my friends that's a fund manager. I'm trying to think which one. And make him chairman of the Fed. I'd abuse power so much. I'd make all my friends, you know, I'd make Pestercelli the treasurer. I'd make Venuto or whatever. I'd make people that I know. You know who I'd make I'd make I would make Mike Coe the chairman of the Federal Reserve. He would be a great chairman of the Federal Reserve. That guy is the smartest, most measured type guy, has the perfect personality for that. Yeah, so you don't want me to be president, or all the yield max guys are going to run the country. All right. And I'd put Tuttle up there too. I like Matthew Tuttle and other guys other than the yield max guys also. Old David Nicholas would be sharp. All right. You may get back in Alti. Yeah, I mean, Alti's, I mean, the only thing about ULTI that disappointed me is it said it was going to have protected downside, and I didn't see much evidence of it. Because you know me, I want everything. I want no capped upside and protected downside. So, but of course, you kind of have to make you kind of have to pick a choice at some point. Like I say, options can do one or two things, but not three usually. You get yourself stretched too thin. Okay, you just found out that GPTY is all taxable, no rock. Wow, that's interesting. I wonder why that is. I would have, GPTY is all. Oh, I have a theory. It also does better than a lot. I'm trying to think. Well, no, I was going to say GPTY maybe uses monthly options, but no, they use weekly options. I don't have a theory. All right. Yeah, I did not know that. Let's look at their website really quick. Let's look at the little GPTY. That's a really good performing fund, as you guys are aware, because I won't shut up about it. So I'm seeing 100% rock right here on the most recent distribution. 23, 72, 00, 100, 100, 100. I mean, if you averaged all these up, when the market's going, I'm trying to think. When the market's going up, it's all rock, it looks like. Because look at this, 6, 7, it's 100% rock. When the market starts going down, you might have actual profits from some of the options because they're expiring. I think it depends on. In an option trade, you have one. In a cover call, you have one leg that loses money and one leg that makes money. It's kind of like an arbitrage. Sometimes both legs can make money, but kind of, usually that's the way it goes. So, and I'm not an accountant, but the return of capital rules, the accountants are able to take advantage of it and push everything into the return of capital category, regardless of whether it really is or not. In some cases, but I think they can do that in a down market. But it depends on what the market's doing. It depends on which leg is winning, which leg is losing. It depends if they really are returning your capital or not. So GDXY is also no rock. Now on GDXY, I would believe it. Well, now let's test my theory on GDXY. GDXY has gone nothing but straight up. So if my theory is right on GDXY, it should, especially recently, have 100% rock. I think the rock comes from the up moves, but I could be totally wrong on that. Let's go look at GDXY. Where is GDXY? GDXY, GDXY, GDXY. $95, $94, $94, $95, $96. It looks like it hits about $95 most times. There's a few times when I have zero. I wonder what NAN percentage means. Not. Well, anyway. So the 19A means nothing. I'm not saying that. I don't know. I was just pulling up. I don't look at the 19A, but yeah, the 19. I think it depends. I think that these rocks right here are estimates, and I think that doesn't it in the final one that comes to you at the end of the year is the actual is the one that counts. But I think these are just our estimates. So you could see, you could kind of look back at the year, and you could and you could see it looks like it's about 90% rock on this one. But yeah, on your 19A question, I have no idea. That's a good point. They just published primary 1099. Well, yeah, they is Yield Max. Round Hill did too. I wasn't trying to pick on Yield Max. Or Round Hill does everything. The Yield Max does. I don't remember what I said exactly, but if I messed it up, I'm sorry. All right, there's 23 you guys here. Let's look at I'll talk about anything you guys want to, but let's look at the other stocks really quick. Let's look at, I was looking at Twitter. Yeah, Twitter's a time waster. Twitter and Facebook. If I get on that, I'll start doom scrolling. Oh yeah, I'm going to use the same tab, so I'm not tempted to get onto Twitter. Let's go to stocktools.app/Max. Well, that's my affiliate code. You guys don't have to do that. Stocktools.app. Here we go. So I go straight to dividend or income ETF analysis. I hit select all one time to really select all because it defaults to just Yield Max selected. If you select it once, it's on everything. Then I hit 1 day down here. It'll show you the 1 day performance of every high yield fund versus parent, which I really like to look at. We were talking about not being able to beat your. Or who were we talking about that last night? Maybe it was on my live stream. We were talking about some funds that beat their parents and some funds that don't. And I think it had something to do with that controversy with Brad and the guy for that one fund manager. I forget what it was. All right, so here we go. AVGW, number one, plus 4%, where the parent was only up 2.29%. Morrow, 2.7 against, wow, that's unusual. Yield Max, well, that hardly ever happens, but it does happen occasionally where the Yield Max high yield fund beats the parent. But anyway, now in the W series do all the time because they have 20% leverage. NVDW doing a great job. Chippy, of course, we've already looked at Chippy. It's up another 2.5. AAPW up. Okay, it's a W1, and the W1's beating the parent. The W1s are known for beating the parents, but because they have leverage. AMZW and Amazon, same thing. You want the W1s are great in the bull market. I mean, everything's great in the bull market. If the market just goes up like it did last summer for 3 months, May, June, July, and August, everything works. But anyway. But the ones with the W1s work particularly well. All right, then we have Carvani. Look at Carvani. It's from Yield Max, but it's almost catching as much upside as its parents. Close. Aptly catching about 90% of the upside. AMDW, MSFO. These are all the blue chippies. Now we have a lot of earnings this week, right? Don't we have? Tomorrow we have Facebook. I think we have pretty much the Mag 7 earnings this week. So this could all drastically change. That's a 1 day look at it. Let's look at a 1 week look to get a little bit bigger perspective. Sorry, it's taking a little bit. I'm sure some will be upset by this. Oh, about the rock. Oh, I know what you're saying. You're saying Roundhill did too. Does the rock thing? Yeah. Misty's 100% rock. Okay, so yeah, so it doesn't make sense that the up market would create rock. I would think the down market would create rock, but in that one look we were looking at, anyway, whatever. Um, but yeah, I would think the down market would create rock because your investment's losing money. Even though the covered calls are expiring worthless, the overall investments. Yeah. So anyway, Chippy has 24% rock. Okay, where did you get that overall rock figure? Was that just from the last week, Fish, or did you take an average, or did they show an average somewhere? Hey, D-Chen, thanks for being here, buddy. All right, so let's see what's going on here. Here, I'll take that off the screen so you can see. Oh, yeah. Don't forget to like and subscribe. Let me get that darn thing off the screen. Sorry about that. All right. All right, here we have for the week. It's all about Facebook. Look at that. METW, 14%. They have 20% leverage per week. You can see in this instance right here, it went from 11 to 14. It's $3 on 11. About 20, 30% or something, 25% something. Anyway, look at Moderna. I mean, Murray's just such a dog, but every dog has its day, or that's what they say anyway. But for the week, the W's have been killing it. AMDW, NVDW. Look at Fibby from Facebook, catching about 80% of the upside. Carvani catching about 80% of the upside. NV2 from Rex. The Rex ones have been kind of quiet today. I haven't mentioned the Rex ones much. In any event, there's a good one right there. NV2 beating the parent. TQQY. I like to see that. Look at that one. Is TQQY doubling the parent? Nah, that's not. Oh, for the week. Yeah. For the week, the Qs are up nearly 4 and TQQY is up nearly 7. Anyway, that's I like to see that. I like to see that. Okay, yeah, you're getting off the website. I was wondering too, because that's where I was getting it. You just had such an exact figure. I didn't know if that's probably just the most recent week's rock or whatever. Or I didn't know. I was just wondering how you got that figure. Good to see QLDY can recapture upside on green days. Well, it can do a heck of a lot better job than any of these other dogs are doing, than a lot of these other dogs are doing. It also wasn't down as much. I don't know that QLDY may not be one of the better ones in there. Maybe I should have made QLDY a diva. The reason I did is because it's based on the whole index and it's mechanical. Not that can't be a great strategy, but the divas are really trying to test the fund manager's ability. A lot of what's going on with the divas is based on what funds they're pulling in and taking out, and I think that's kind of fun to watch. And QLDY may be more effective or whatever, just not as fun to cover. But it's fun to make money, right? Supplemental tax, yes. Oh, I see what you're saying, Fish. I see what you're saying. So Fish is saying, yeah, right there. The overall rock is right there. But the rock for this past week is right there, 95.9. But they give you that kind of overall, because some weeks there's no rock for whatever reason. $300 million in this fund. I know a lot of. Let's check. What are gold and silver doing this morning? I can't believe I didn't check yet. I got up late and I've just been behind all morning. Yeah, K Gold's up nearly 1%. Heck yes. Gosh, I hate not taking profits when everyone's offered to me. I'm so tempted. I'm in at like 28 on K-Silv. I could sell half my position and have the rest of the position be free runners. I can keep them forever. They're free. They're paid for, and they're going to keep. But I mean, then it's going to take my silver allocation down. So I've been thinking, but I could sell. But I like the idea of having free. I like the idea of free money. And whenever you can buy something and it doubles and you sell half, you have free money. I do that all the time in options. I'll buy 2 options at 2. Or I'll say you buy 2 options for 1 when I think the market's going to rally by Friday or something. You go out there, buy 2 options for $1. Then as soon as you do it, put a good till canceled order in to sell one of those at $2. If your order gets filled, the other then you have to manage the other option, but the other option is free. And if you get a big rally, you can, anyway, or a big sell off, and you happen to be on the right side of one of those trades. That I try to take my risk out of the trade as soon as I can. But on stocks, it's different because the stock never expires, and this thing is also paying a yield along the way. So, but I'm tempted to sell half of it and just say I have K-Silv free for the rest of, my family has K-Silv free. I guess I could sell half of it and then put the money in some other kind of precious metals, something. Maybe that's what I'll do. Maybe sell half of it and diversify into something like diversify part of it into something like hard or maybe CTA. Something else that's probably what I'll do. But anyway, I need to look at doing that. But I mean, it's tempting not to blow out of K-Silv because it's free money. I mean, and I could probably do something similar to K-Gold. I mean, I'm in K-Gold. I got K-Gold right around here, or I bought it too high. I think I bought it right here. But still, I'm in K-Gold at, when you're doing this kind of stuff, you need to take off the just data for dividends. So I'm in K-Gold at 29, and it's trading at 36. Now, yes, I've got dividends there along the way, so my profit is more than 29 to 36. But for looking at these kinds of stuff, based on my profit, it is as if I bought it at 28 and it went to 36. So anyway, all right. So okay. So fish, what do you tell me? Okay, the rock you looked at means nothing. Yeah, true. But they publish those so people can estimate their rock, right? They always. I mean, when these things first come out, the funds didn't used to give live rock. I remember 2 years ago, but then they realized the rock was a selling point, and most of the funds started showing the weekly rock. But yeah, all of them, Mike Coe, Jay Pestrochelli, and all of them say this isn't official. You can't turn this into the IRS. So yeah, it's a good point, Fish. Thank you. It is a great point. All right, so we checked out gold and silver. What else? Man, I don't know. I'm going to get out of here and work on some new videos. I got a video coming. A couple of weeks ago, I did one on how to prepare for the coming bear market. Well, I have a part 2 to that. I have some more. You guys will like it, I think. I'm going to talk about some other, buffer funds and stuff. And then I'm looking at what else I'm working on. Oh yeah, then I'm making a review on CTA and hard. That's why I was talking about CTA and hard. And commodity type plays. Hard is where you actually own the commodities. No K1, of course. CTA it's a commodity trading strategy, but so I have the 2 videos coming out: video on CTA and then a video on a video on how to hedge for the coming bear market. I'm going to try to get both of those out today. So I'll be working really hard. I'll be here if you guys need me. All right, guys. Well, thank you so much for being here. I appreciate each and every one of the 26 of you guys that are here. I even appreciate the guys that aren't here but are usually here. Let's see. Remember, It's not financial advice. Check anything you hear here with the financial planner. I'm trying to give good advice, but my advice is for me because I can't possibly know your situation, you know. So, so in any event, but that's your planner can kind of help you with that. Get a licensed planner, please. Oh, and also don't forget you can support the station at paypal.me/Max Convexity. All right, guys. Thank you so much. I appreciate you guys, and I hope you have a good day. Hit me up in Discord or send me a text if you have my number, whatever, if you guys need to talk, and I will be around. All right, guys. See you later.